Hey, Ali, pleasure to meet you at this past event in Lisbon at Crypto Icon. Was definitely a random encounter, but I thought your story in this space and what you're building is pretty interesting. For our listeners, why don't you start with an intro about yourself and tell us a little bit about how you got into crypto?
Great. Thanks so much for having me on. Always love to meet fellow passionate people and supporters of the builders, the entrepreneurs, the visionaries. So yeah, really glad to be here. My background originally is in architecture. I've had kind of you could say a meandering journey to get to this point of crypto, which although it has spanned a few different industries, I feel like has given me a really sufficient kind of background in understanding the core principles around not just building, but like building with structure and building with intention and how to actually create environments where relationships can carry projects forward. My background originally is in architecture. Also, even before that, in the realm of music and production, I've always been extremely fascinated by culture. But with a background in architecture, learning about how the built environment can actually inspire identity and how that identity can actually mature into behaviors and mindsets and how that actually really does fundamentally shift the way humans interact and relate to each other. And I have to say, in the early days of learning those kind of concepts, it just seemed like such a far off, like, how are those two things even related? But after 2 decade career as an entrepreneur across architecture, fashion, design, and economic development, I can say those things are absolutely fundamental and certainly true and underpinning the way humans interact with each other. So whether it be in the realm of fashion and how we express ourselves with the what we're wearing, or whether it be in the cultural kind of unspoken but all followed social contracts of like how do we actually interact with each other? How do we treat? What are the social norms? How do we treat each other? How do we treat new ideas? Right? How do we treat potentially threatening new concepts? Right? Are they welcomed and we can have these kind of like intelligent discourses? Or is it a culture where no, those are new ideas, they need to be attacked, right? That needs to be taken down. So these kind of cultural behaviors that evolve around what we're doing. But all around, I think understanding how structure and design and systems actually affect the way humans interact has been a consistent element in what I've been learning about and experimenting with. And I think all of those ideals are expressed extremely clearly in the realm of Web3 when we're looking at economic systems and when we're looking at tokenomics and collectibles and speculation, that all of these key elements are almost like rapid experiments that are happening in the span of one bull market or a few year span, that we're seeing even new narratives take hold and billion-dollar economies form behind them, sometimes even larger than that. So with these kind of areas, I think it's just incredible to watch the design choices we make actually have immediate effect and a measurable effect when it comes to the economy that comes in to these types of communities, projects, tokens, whatever it might be.
That sounds fascinating, Ali. And let's dive a bit into your background before crypto. I know you are an architect from professional, from graduating college. How did you took a dive into the crypto world? What and how was this journey for our listeners that are just trying to understand how can they even get involved and maybe
No
change
doubt.
their careers?
Yeah, it's a weird thing. Changing your career is like a two-edged sword. But my journey took me from architecture, where I was extremely passionate around the built environment, and then into a job where I was working what felt like more like a lawyer than this incredible starry-eyed designer, and looking at zoning analysis and working in New York City. Felt like my creative spirit was just getting crushed in this architecture office, even though I was designing buildings that were getting built and dealing with clients and dealing with the city. And it was a great experience, a wealth of experience. But I left the firm to start my own fashion company, thinking, hey, I want to put this design degree to better use, something more exciting, more close to the culture. And so I launched a fashion company and thinking, hey, I'm in New York City. We have New York Fashion Week. This is going to be easy. We'll get some designers, we'll make some designs, and we'll jump in. And with all the enthusiasm and excitement and naivete, that was the beginning of my entrepreneurial career. And from there, I just never looked back. It was just always exciting to be building products and taking ideas all the way through the journey from something that was in your head to something that could make it onto a napkin to something that could make its way into tech sheets or into some kind of actual draft and making prototypes. So I was really fascinated with building, from buildings to clothing. And then from there, around 2008, went into more of a design heavy focus. And that led me into economic development. We were working with some different state governments. We were working in the realm of building complementary currencies and finding ways of using communication campaigns to drive awareness of reasons a business should relocate or reasons a business should take advantage of certain resources. And you could say like really boots on the ground community building. And this was essentially the backdrop before getting into crypto hardcore, this realm of even reading the white paper around 2012 or so for Bitcoin, but not because I was thinking, oh, I have an investment strategy built around this, but more what makes a currency? How did these currencies come about? Who designed the dollar? Who designed the euro? And really getting really deep into economic design. And that translated perfectly to learning about NFTs. And in that realm around 2020, this fascination of NFTs and this incredible creativity that was unleashed by smart contracts became to take hold. And we built a giant community on the app called Clubhouse around educating and onboarding people into crypto. And this was an endless abyss of learning and education. And we were running these open audio spaces and having thousands of people come through them. And over the course of about a year and a half, our tally is that we onboarded about 500,000 people into the space.
Oh, fascinating. And going back to 2012, did it click on your mind right away that Bitcoin was here as an alternative form of currency, money, as you probably lived through the recession in 2008, and you're like, this potentially makes sense?
I have to say, it took a really long time for that to sink in. It took almost like 10 years for that to sink in. But it was around 2020 where I started building habits of saving in Bitcoin. It was almost insane to know that much about it and the theory and the concept of Ethereum before it was anything. But I had no mentality around saving. I had no mentality around, I was so driven in building businesses. I wasn't thinking, oh, let me build a portfolio. Let me also add these alternative asset classes to a portfolio. I didn't have the maturity of mind at the time. But then going into 2020, it started to just become like, okay, yeah, we're saving in Bitcoin. This is what we're doing. Like, if anything, it started building those habits of saving and of building towards having a portfolio and having some early wins in the NFT space to see, oh my goodness, this could be life-changing money. Even just in terms of the mindset that it inspires of how that can be life-changing because it's building different habits, building different awareness, building different social groups. And with all of those things, like the sum total of that is now being firmly rooted in having a venture studio and building companies and building towards having a fund as well that to support builders and build this ecosystem.
Yeah, for
But yeah,
sure.
so I would say like it took that long for those seeds to grow, but they grew into something extremely substantial, like in my mind at this point. Now people are like, oh yeah, Glassy, the Bitcoin guy.
But
Which I hold proudly. I'm like, okay, that's right. I'm the Bitcoin guy.
and I think it takes everyone some time to click in and go down the rabbit hole. And there's this term around the Bitcoin community that we can take a deep dive, as you also mentioned, the financial sovereignty term. And I don't think a lot of people get this. And we're in 2025. It's been almost 100 years since actually the US government confiscated or forced Americans to surrender their gold for multiple reasons. But maybe we can take a deep dive into this. Why Bitcoin enables this and why it's so important.
The idea of sovereignty it's like one of those words that sounds like a shiny word. Like it sounds like the kind of thing we should like, but it's also complex and isn't necessarily so like easily graspable. Maybe like even if you start thinking about words like freedom, you're like, okay, freedom. Like I get to choose. I'm the one that gets to be in control of my savings, for example. Am I allowed to save? And if I hold those savings, are they just going to, the value of those savings going to be eroded because of inflation? Because the government that controls that currency continues to print more of the currency? That's out of my control. So if I'm saving in US dollars, but the US government is printing more US dollars all the time, the value of my dollars is actually decreasing every year. So that's like maybe a force against my financial sovereignty because it's a factor that's weighing against my ability to simply hold and control the value of something that I've accrued. So Bitcoin is like a counter, you could say like a counterbalance or a counter force where just by having a fixed supply, we are feeling really great about holding this as a reserve of our value, as a holder of our value. I know we're seeing a lot of volatility, goes up, goes down. Everyone's celebrating. We're seeing all-time highs lately. We were all crying for a few years as we were going through the bear market. So there's volatility. But if you look in the longer term, it's a volatility that is moving in an upward direction. And there's a lot of reasons for that. Certainly the fixed supply being maybe the easiest thing to point to say there's an impossibility for someone to just jump in and say, we're going to print more Bitcoin. Yes, more Bitcoin is being mined into existence. That is the incentive for people to run their various miners and to do their part in upkeeping this decentralized ledger. But at the end of the day, it's a fixed supply of 21 million. And because of that, it feels like a great place to store our assets because not only is it not going to be eroded by inflation, but in fact, because of the increasing demand, and we're seeing this certainly lately with the Trump presidency and with now other nations looking at moving towards a strategic reserve and keeping a strategic reserve of Bitcoin as part of their economic policies, that we're seeing this massive adoption, but it's going to still be contending over the same 21 million Bitcoin. So that fixed supply, we can expect that the value of these Bitcoin, of these 21 million Bitcoin, is going to sum total be either steady or increase in value. And for these reasons, it's a great foundational layer of what you could say building blocks towards our financial sovereignty. And I'm going to talk about just two other components of it. I mentioned briefly the decentralized nature, the fact that it's run as a protocol, and it's run not just by one server, but by all this whole multitude in excess of 100,000 different instances of the Bitcoin ledger being kept in all these different computers across the world. It's decentralized. There's not one entity that is controlling the future or nature or whatever. There's no individual that has decision-making power over the entire network. So it's decentralized. We love that. That's another element that adds to this building blocks of sovereignty or financial freedom tools. The other element is that it operates in a trustless and a permissionless way. And we'll just speak briefly on each of those. Trustless meaning I don't need to trust an intermediary because there's so much duplication and redundancy on a protocol level. I can trust the network. I trust Bitcoin as a whole. It's had 100% uptime since it started. We're seeing trends that are extremely, you could say, close to predictable that we're seeing in these 4-year cycles in terms of how it was programmed. And so with the semi-predictability, plenty of volatility, decentralization, and a trustless architecture where we don't have to trust intermediaries because the protocol is doing all the hard work of keeping track of who owns what and who's sending how much Bitcoin to the other person. So everyone's Bitcoin ledger is kept in this way. And the last thing is that it's permissionless. We don't have to ask for permission to withdraw that money or to send or to transact or to deal with protocols. And these are, I would say, the pillars of financial sovereignty.
Let's talk a bit about storage. I know you're building something related to this, but before we take a deep dive, what is the proof of keys event in the Bitcoin community? How important it is for the listener to know, should I own my Bitcoin keys and store them in XYZ way? Should I use maybe a centralized party to hold those coins? What are your thoughts and advice here?
I would answer with some statistics from this year. Within the first 2 quarters, within the first 6 months of 2024, we saw more than $2 billion in hacks from crypto that was stolen, that was managed or in a custodial service, generally centralized exchanges being the main target of these hacks. Sure, you could store your crypto with a custodian. That's an option. And I think a lot of people's journey in either buying crypto or somewhere along the lines is likely having to interact with a custodian. It's like part of the landscape. So I can't say like never, ever touch them. But I would say, generally speaking, you don't want to store your assets with a custodian because that's immediately relinquishing that sovereignty that we were just talking about. Instead of you being the one that's in control of your assets, by having a custodian hold your Bitcoin for you, you're immediately relinquishing that control and putting that in their hands. So now you don't have a permissionless environment. You don't have a trustless environment because now you're forced to trust the intermediary. You're forced to ask for permission when you want to send those transactions. And if it's in their control and they're the ones that are technically in control of the keys, the seed phrase of this account that's holding the Bitcoin, then they're technically the ones that can send it, that can transfer it, or can block you from sending it. So that pretty much goes directly against all of these fundamental tenets of Bitcoin. And though it might come with some convenience, I would say, generally speaking, you want to avoid that for any amount of time. Besides, maybe you're going to do some trading. Okay, do some trading. You're going to buy some crypto. You have to go through those channels. And then I would highly suggest moving those assets directly into a multi-sig. That would be the highest level security as far as being able to have not just one point of potential failure, but having a layered approach to your security where you have 2 or 3 or 4 more different wallets that would have to sign off in order to allow a transaction to be sent off.
Yeah, that sounds pretty interesting. I have always learned that since day one. Not your keys, not your coins, I think is really an important step. And yeah,
Yeah, it's something like a mantra. They're like, not your keys, not your crypto. Oh, something happened with an exchange. They're like, sorry, bud, not your keys, not your crypto. You shouldn't have done that. Oh, someone took my phone out of my car. Homie, you forgot you didn't even lock your door. Like you had all your doors wide open. You had your windows open. They just came in and took it.
yeah, and I understand it can be hard for retail that comes in for the first time to understand this concept as we come from a world that, hey, let's call customer support and fix a transaction or revert it. And in Bitcoin or crypto, there is no customer service. You can't revert money once you send it. And a lot of people forget about this concept. And
Yeah, it's true. We probably skipped like 2 of the pillars of financial sovereignty. One of those being responsibility. Because now you're taking like, okay, great, we have this freedom, but with that comes the responsibility. And that means if you're going to be a self-custodian, then you certainly need to be able to keep those keys very safe. You're going to need to be able to keep them in a place where you have access to them, where you're not putting them in a place where someone else might have access because you saved it on iCloud and then the iCloud got hacked, or you saved them in some other place that someone could get access to. So it's bizarre. It's like the most cutting edge technology. And at the same time, it involves instructions like, oh, by the way, get out a pencil and a paper, or get out a permanent marker and a paper and write down these 12 words. So yeah, that's very clunky, in my opinion. It's like hard to say, like maybe to teach your grandmother or auntie, like why is this so important to write down these 12 words? But I think that it's important. And this is maybe the other pillar of education and community, and having other human beings that are helping teach each other and reinforce these elements of what does it look like to move towards sovereignty. It certainly involves a lot of awareness building, and it certainly involves a lot of us teaching each other, our family members included, to reinforce these different habits and these different mindsets. And I would say this comes all the way back around to what we were talking about right at the beginning of the identity that you take on to say, no, I am going to be financially sovereign, right? This is being a financially sovereign being is important to me. And as that being part of my identity, I'm willing to go the extra mile for responsibility and different types of best practices, and writing down my seed phrase and not sharing it, and understanding the importance of having that in multiple places, maybe even going so far as to etch it in metal and have that in some indelible place, so that almost under any circumstance, I would be able to get access and not be in a situation where I'm not in control of my own assets.
there's actually some really interesting stories on how people store their crypto. There's a book out there called Bitcoin Billionaires. I highly recommend the listener to read that. But it talks how the Winklevoss store their crypto, where they bought new computers, printers, and got the seed phrase in a locked room with no light from the outside or something like that. And they're super diligent. And they cut the paper into pieces and fly across the US and put it in
Yeah,
different
that's exciting.
frames.
You make yourself a treasure hunt. I heard that about Vitalik as well. They're like, he has like different parts of seed phrases like hidden in different cities and different places. I think that's exciting personally,
Well,
but
I can't even imagine what people go and do. And there's a lot of resources out there if you would like to learn that listening to this podcast. Regarding investing, shifting topics here, I always learned that we should never hold our eggs in one basket. And I think this relates to what you're building. And actually, I'm a very big fan of indexes in traditional finance, as it gives us exposed to the entire market, but we can diversify our portfolio and get XYZ returns instead of just holding all in one stock. How does what you're building at CoVault translate into this and to empower the next generation of DeFi products on Bitcoin, I would say?
I would say the next like layer of evolution, DeFi has been around for quite a while, mainly on Ethereum and certainly getting very popular on various L2s and other chains. But I would say the next evolution is right in line with what we've been discussing, are self-custody based DeFi tools. Ones where I don't have to sacrifice custody to an intermediary, one where I can understand exactly on a what is happening to my money, what levels of trustless infrastructure are being put into place. And I think this is the next generation, self-custody based tools. So one of the key things we built at CoVault is a series of vault primitives to empower this next evolution within the space, all of which are self-custody based. I won't go through every single one, but I'll say it starts with the vault primitive of a multisig, just like we were describing, and then adding more layers to it that include a vault position token that can connect the multisig, treating the multisig as a vault that can hold many different types of assets, that we can start automating processes of things like staking, so that maybe I want to lock my Bitcoin in order to gain a yield, right? I think this is one of the more exciting use cases and builds that we're doing. So I want to lock my Bitcoin, I want to get a yield, but maybe it's so complex to choose between the different yield opportunities. Do I want to go into lending? Do I want to go into liquidity pools? Do I want to go into some other type of volatility harvesting? Do I want to invest in stable coins or LSTs? There's so many different genres of token and of yield opportunities that our mission at CoVault is to make that as simple as possible. And we're doing two things in that regard. One is making vaults that you can just activate and get benefit from the yield with a single click. So these yield vaults make it super easy to put your Bitcoin to work for you without actually sacrificing any custody. The other product that we're developing and extremely excited about is something we call our curated token index vaults. And what this is empowering us to do is to build token indexes based on a ton of research and bundling these assets together and then co-marketing these projects. And this, in some cases, is even pre-TGE. So it's like a pre-sale mechanism for vetted research projects. And it gives investors the opportunity to get exposure to a whole basket of tokens with a single purchase. And after making that purchase, then they're airdropped their portion of tokens that relate to that index. So we're doing these things aligned with different ecosystems, as well as different genres like AI, RWA, gaming, and LSTs and the like. LST stands for liquid staking token, which is a whole genre of tokens unto itself.
Amazing. And does this yield or the exposure I have on these indexes comes from any token out in the market or only Bitcoin specific tokens? Is it
Right now it's Bitcoin. Right now it's Bitcoin. And I'm actually really glad you asked that question, because we came originally from an EVM background, more from the Ethereum side, building there. And the community that we built, that was much more the narrative where NFTs were happening, certainly along with Solana, Tezos, and a few others. But our platform powers, yes, the Bitcoin native tokens, including Runes and BRC20 and TAP, but we also power EVM. 90% of the development that has happened to date has been in the realm of Ethereum virtual machine. So we have built, or I should say we integrated a embedded EVM wallet. So even within our multisig that we're able to hold ERC20s. And so much of our token indexes will be built on those type of tokens. And in the relatively near future, we'll also add SUI, and with one of our key partners, ICA, we'll be integrating essentially almost every chain. Yeah, essentially every chain through the orchestration with ICA, IKA.
That's really fascinating. And let's dive into two things that caught my interest about CoVault. The number one was the sort of the age of intelligence custody. Are you applying your AI agents mechanisms that allow us to rebalance a portfolio to see the XYZ APY that I might have on XYZ coin? What is the plan there? And then also, what is this RWA marketplace?
These are, you could say, some future roadmap, not too distant future roadmap items. Initially, we were thinking, taking inspiration from Steve Jobs. We're like, we need a one button interface. We need the elegant DeFi. DeFi is so complex. Even people that know about it, it breaks your brain how many choices there are, how many gas tokens you might need, how many times you might need to swap. There's so many nuances to the engineering and the interface. We were like, we need an elegant interface. So that's initially what we set ourselves to. And after attending the Crypto AI Con, a different light bulb went on in my head, which is clearly in a year from now, I'm pretty convinced that within a year, maybe a couple years, probably 1 year, that no one's dealing with their DeFi vaults. No one's dealing with this ugly complexity and all these hard decisions and what am I going to do and how many gas tokens do I need? No, it doesn't make any sense. That's not even a future I would predict. The future is going to be AI agents are going to be dealing with all of that on behalf of the users. And so, yes, absolutely. We see that first of all, we're making easy to use DeFi vaults that humans can use, but we're immediately building in mind that these humans are most likely going to be you could say the tip of the iceberg. And for a much larger retail adoption, agents will be a far better and more suitable interface where the agents are operating on behalf of the user, where the agents have the ability to spend and to build yield strategies, and at the end of the day, be able to earn additional Bitcoin on behalf of their users. And so ultimately, that's the framework that we're building towards, and to empower for AI to be in charge of making a lot of these decisions.
Let's take a deep dive into the fact that we'll have, or very close to a future where AI agents will be balancing our portfolios and doing all the automated work. What can be the potential impact in capital markets when humans are no longer trading based on emotions or sentiment? Is this going to potentially change the way markets completely react in the future? Is it a new renaissance?
Hard to say. In my opinion, where we're moving to is more efficient markets. And I think there's just a lot of benefits. Like I would say there's a lot of suffering that happens because of inefficient markets. And there's tremendous benefit that gets unlocked as those markets become more efficient. When it comes to things like intellectual property, I think we could see like this is an extremely inefficient market. It's hard for most retail investors to get exposure. Massive institutions control most of the buying power and benefit that comes from it. And I think this spans both from a cultural level, like music and those kind of IP, movies and that kind of games. I think that also spans into science, into the right across the board, into innovation and IP in that realm. That it's massive institutions that control, whether it be a college, whether it be these massive companies. And at the end of the day, the scientists or the artists themselves are not necessarily seeing the benefit from that. They're not necessarily becoming empowered to invent or build the next most innovative type, whether it be energy or whatever project innovation that might happen. That because of the inefficient market, that our whole civilization essentially is being stifled because the funds are flowing from so few institutions, and because of the benefits and capital and profits are flowing back into those same few hands of those massive institutions, that it's really limiting our growth as a species. Maybe that's overstated in a way, or maybe you couldn't possibly overstate it because it certainly is the case. But I think efficient markets will be unleashed because of AI. And I would say some of my financial friends have said with how much algorithmic trading or AI assisted trading, we're almost in that place already. That although there are certainly a lot of human traders, that many or most or so much of the trading that's happening is either being done on an automated level or is being done by humans that are leveraging these automated or intelligent systems for trading. So I think maybe the far distant future is there goes volatility. You're like, the market got so efficient that we don't have these dips, and like spot trading looks different and leverage and all these kind of things. These tools just look so different. It's possible. or it could be that there's just so many variables and there's so many things at play that there's still a huge amount of dynamic energy and a ton of volatility. And we just see year by year more and more efficiency coming into all these different markets. At the end of the day, hopefully that brings greater wealth distribution, less poverty, easier access to key resources, and further growth of our species.
Yeah, fascinating. Can't wait to experience a future where that's a reality. And let's dive into CoVault. When we had a chance to connect, you explained me a bit of the mechanics and how does this work. And here for our listeners that are interested in using the product, once it's live, I know it's still in a waiting list, but is it essentially I open this multi-sig, let's say vault, deposit my Bitcoin there, but they're not stored in your servers. They're not yours or CoVault's Bitcoin.
Correct. Yeah, we're a facilitator. So the protocol, the coding that we've created, it essentially abstracts the complexity of directly writing Bitcoin script. Uh, it would be too painful if humans had to do it themselves, or even most developers. It's just uncommon that people understand Bitcoin script. Even in the realm of all blockchain development, it's like far less than 10% of the development or whatever has been done there. We just make it really easy for users to deploy the tool that lives on Bitcoin, the coding, the script that lives on Bitcoin in order to hold their Bitcoin. So it's still decentralized. It doesn't come into our possession. We don't have the right to send it or transact or block it or any of those kind of things. But for some of our yield vaults, we will be facilitating the process on behalf of users to, if there needs to be bridging, or if it needs to go, say, to Arbitrum, because there's an incredible DeFi opportunity, a yield opportunity with one of our partners on a different chain that we have to go and swap their assets, that will do that on behalf of the user. But it's not that we're taking their Bitcoin and then doing that. We're just setting up the programming so that when they execute it, that it's all set up for them. You could say it like that. So essentially like a no code way of interacting with the Bitcoin, but still managing your own custody.
Fascinating. And when I lock up my Bitcoin, do I get a derivative of it that I can use like an LSD? Or
Sometimes it depends. There's different types of vaults, and in some circumstances, yes, we're actually building towards having a full LST framework, and that will be powered by a compounding liquid staking token, which means that you could take this and stake it into other platforms, or you could just activate your vault, and then depending on what type of vault you activated, we do all of that for them, where when they unlock their vault, they're able to then claim more Bitcoin than when they started. So we're very bullish on not having multiple tokens. If you lock your Bitcoin in order to earn core, okay, that's great. But now what are you going to do with the core? In other words, this is a core DAO, is a L2 on top of Bitcoin. So there's different yield and DeFi opportunities that are happening there. So our idea being that we'll help the user take advantage of those DeFi opportunities. But at the end of the day, when they want to claim it back to their native vault, that we'll do all the swapping for them so that they can just receive it back in the form of Bitcoin.
and as the DeFi ecosystem keeps evolving, do you see interoperability cross-chain becoming as prominent as easily swapping from Arbitrum or Polygon or even to Sui or
Yes.
any other blockchain out there?
Yeah, I think we see even by the end of this year, maybe by the middle of this year, we start seeing incredible tools that just start making it seem like it was a joke that we couldn't do this before. Like, how were we ever stuck in these little villages where one blockchain could only deal with one blockchain? I think we're very quickly moving to a place where interoperability is a commonplace, and also where we can abstract that complexity away from the user so that to the user, they're just getting yield. Whether it be on Arbitrum or not is not the important thing, because they don't have to go through the pain of that, whether that be on a wallet level or whether that be on a vault level or whether that be in some other novel way. I would say the thing I'm most excited about in that realm is this company called Ika, one of our partners. They built this D wallet that allows for custody or control of this wallet to be the thing that moves instead of moving the assets from one account to another. They move the custody of the account itself. And they built these super smart accounts that can not just hold assets from one blockchain, but can hold assets from essentially all the main blockchains. So things like that almost turn the architecture completely upside down. And now instead of worrying about bridging, because bridges are almost notorious the place for vulnerabilities and the place where things get hacked and so many people lose so much money, you basically do away with the bridge because there's no more need to move the asset itself if you can move the custody. And the way they do that is with essentially key shards. They use a 2PC, what they call a 2PC MPC system, and it uses key shards. We were talking about controlling your seed phrase earlier. In their system, you control a part of your seed phrase. The protocol controls the other part, and the entire cryptography and sequence is set up in such a way that assets can never be moved unless the individual that controls the vault or controls the wallet is the one to trigger the movement. In other words, the protocol can only support that movement, but it cannot trigger it alone. So in this way, they essentially solve not even needing bridges. It's like this moment in the Matrix when the small child is telling Neo, there is no spoon. There is no bridge. We need no bridge. There's no bridging required. We can move into this place free and uninhibited to have full access across all these different blockchains. And to me, that just makes the most sense. If there's innovation happening across different blockchains, as builders and as users, we should not be restricted just to one ecosystem or the other.
And do you think that over time, Bitcoin could end up sucking this value that's on other chains, as Bitcoin is a chain with the highest network effect, the highest security?
I think that actually, like on the one hand, it sounds ridiculous. You're like, how would that ever happen? But this is, I think, how it could happen. When we look at markets and we look at almost any market, what seems to be the dominant force, the largest, most secure, just the biggest player, and maybe the fastest player have secure positions, and anything in between has the potential opportunity to get swept away. I don't think Bitcoin is necessarily going to gobble up all of these other ecosystems or just suddenly just take over all the liquidity for everything. But I would not be surprised at all if Bitcoin continues to grow as the way to secure your long-term holdings. What better place are you going to keep your assets that you know you're going to hold? Long-term savings, long-term growth plan. I think a lot of times you might go to other chains to make money, whether it be through DeFi, whether it be through meme tokens or other types of token plays or trading or other algorithmic trading or any kind of things, AI-assisted activities. But at the end of the day, I do imagine that people are going to take those gains and they're going to buy Bitcoin and they're going to put them in a multi-sig or put them in an extremely safe and secure self-custody solution. And that's going to be their long-term savings. And that's going to be the thing that they pass on to their next of kin. And likely when we're seeing estates that are growing and inheritance and these kind of things, that I think over time we start seeing more and more Bitcoin being one of the primary assets that is gathered and accumulating and being passed on.
I can't wait to see a world where that's a reality, especially as we just broke an all-time high with Bitcoin. And I've been here for a very long time. And to be frank with our listeners and you, I never imagined to see this price, to be honest. It's quite fascinating, but also was a lot of work. And the community went through a lot of ups and downs.
Yeah, we didn't get here out of nowhere.
Yeah, it was tough. When especially governments never accepting or never endorsing it. And this year we having an actual president coming in and stepping out and say, oh, this is real. And it's the 9th most valuable asset in the entire world. Wow. Very fast.
Yeah, it's bizarre. What was on the fringe. And like you said, in our lifetime, this went from an idea to put in practice to looked at as a scam and where bad things happen and Silk Road and illicit activities and Bitcoin machines and tax evasion or all the Bitcoin maxis. And now this incredible like adoption, willingness to that it's like even in the public perception that you can talk about crypto. And the first thing people think of is Bitcoin. And the first thing they think is, oh, Bitcoin and Bitcoin's going up. Things are positive. It's not stuck in a place where, oh, that's a scam. That's only where scammers are. And not only that, like you said, actually having a US president endorse it. And then not only that, endorse it in such a way that other countries are now making moves to also build a strategic reserve. And I think this was definitely the thing that people have been talking about forever, but probably never expected that it actually would come or that we would see it unfold this fast, like during this cycle. So yeah, it's a crazy time to be alive. And I think the most exciting thing for me is to be seeing not only Bitcoin as a place to hold value, but a place to build on and a place to build secure sovereign financial tools and tooling and apps, even to secure storage on this incredible protocol is it's fascinating to watch that happen because even 3 4 years ago, even though a lot of these scripting languages that we're using to build on, like Taproot script, came online into Bitcoin in 2021. So it's been this many years later for people to catch on to what incredible innovation is possible with the existing scripting languages. And then also with the evolution of things like Ika, with the evolution of some of these other trustless protocols, SwapKit, Thorchain, some of these other great things, Threshold, this wild evolution of Bitcoin scaling solutions. Now it seems to be this renaissance moment for builders and brain energy and VC money to be pouring in and supporting this building. So
And
for
Ellie,
all of those reasons, it's like the best time to be active in the space.
and for those that are not familiar with Taproot, can you give a very simple rundown of how that changed things?
So Taproot essentially allowed, we'll just say, slightly more programmability, just slightly more programmability. And I could also say that even before Taproot, things like multisig was available. And we, in CoVault, we built in the native SegWit. Initially, we built all our vaults with native SegWit. And then we went through on the desire to future proof and to be able to hold all of these different meta assets in a familiar way for people that are collecting ordinals and now runes and these other kind of meta assets that we built it also in Taproot. I feel like if I get into the technical specifics, everyone's going to immediately fall asleep.
Yeah.
But we can say that Taproot, one of the key things that came into being with Taproot on Bitcoin were Schnorr signatures, which is a different way of being able to stack signatures in order to then allow transactions to go through. And it allowed another, you could say, more evolved programmability that was not possible before. But with creative engineering, a lot of those things were possible with native SegWit. And native SegWit is a smaller kind of data packet that will be produced. So for people that are, say, only interacting with runes, then that would be an appropriate scripting language to use. But if someone was going to be doing something a lot more sophisticated and dealing with ordinals and an ordinal theory, then very likely they're going to want to be building with Taproot script.
In terms of impact, where do you believe or how that CoVault can achieve in terms of a global community of investors, builders, and users in the next 5, 10 years?
I like to believe we can help be that threshold community that helps encourage the legacy economy to migrate to the on-chain economy, where whether it be funds and hedge funds and these kind of things, or retail users, or even much larger institutions, where they can start finding the tooling that is, first of all, up to the security standards that they need, that is, second of all, easy enough to understand and interact with, or easy enough to build on, where they can build more interesting and innovative financial products, blockchain based. And I would like to see that CoVault is very active in cross-cultural economic exchange and using token indexes and token economies as a way to do that. Even in the building of our own core team, we were very selective or very intentional with selecting candidates from different geographies. We span the globe, and we have check-ins all the time on how do you see this affecting people in your local geography. And we're building emissary and other DevOps programs. We're always thinking about how do we actually introduce key people and key communities in different geographies. So for me, I think it's a fundamental part of our mission to help weave this cross-cultural fabric together. And I think that's one of the benefits of Web3, certainly of Bitcoin. I heard someone say this, that crypto is a lot like music, where it's among the few things that can so easily flow across all jurisdictions. There's no line on any map that can stop the music from coming in, or that can stop the Bitcoin from coming in, for that matter, even when they might pass laws to say, okay, you're not allowed to do this, or you're not allowed for self-custody, or whatever it is. That the strength of the network and the freedom tools is so strong that actually it does pass across all of these different borders. And I think it poses really difficult problems when we run into things like jurisdictions. This isn't allowed. People from this country, how many times do I go? I'm in the United States. How many times do I go to a fascinating new project and I get the error? Sorry, we detected your IP is from the US and we can't serve you. I'm like, dang, that stings. And this is the USA. Aren't we supposed to be the greatest country? How are we the ones getting excluded from these things? But I think we do see, at least over the next 4 years, hopefully for much longer, more clarity around legislation and better tooling with AI and all of these other things where we can connect across these different jurisdictions in a legal and compliant way. And that very much paves the way for this threshold moment and for companies like ours to help steward the legacy economy and help build more efficient markets and to bring those into these new environments of the on-chain economy, which has entirely different physics.
Yeah, for sure. I see on your top right of your background the Bitcoin Startup Lab. Is that somewhere where people can get involved if they would like to build on Bitcoin? What would you recommend them?
Yes, this is actually where CoVault was born. I love to talk about Bitcoin Startup Lab. There's like a phrase of saying you got orange pilled, which is like in the Neo in the Matrix, but it's no, you took the orange pill, which means like now you are waking up to financial sovereignty and how important decentralization is and self custody and all of these things we believe in. So Bitcoin Startup Lab is an incredible, they call themselves a pre-accelerator. First of all, it's quite an exclusive program. I believe like 1,000 or even into the several thousand of founders apply. In our cohort in particular, they accepted, I believe it was about 50 or so, and they run a very stringent program. It's about 12 to 14 weeks. During this time, there are massive requirements of what you have to do and accomplish every week in order to find your fulcrum, to find a real pain in the world, and to start finding a way to address that pain with a single feature, with a specific feature set, or in their case, one feature to address one pain problem or one pain among one very specific group of people. And with this methodology, this is exactly where CoVault was born and where we came to understand not only just the importance of custody, but the importance of building infrastructure on Bitcoin that can empower people to do things that were either very difficult before in terms of having to custom code these scripts to now just being able to click a few buttons and have access to that high level security. But yeah, Bitcoin Startup Lab is constantly running cohorts for any founders or builders that are interested in building in the space. I highly encourage them to apply. They say that they take founders at the bad idea stage. So even it doesn't matter what your idea is, they're looking for solid founders that they can bring through their process to help you land on an extremely powerful idea and go through their process and methodology to then build that out and to create an investment ready startup in record time. That's their main
That's
focus.
pretty epic.
Yeah.
And if our listeners would like to follow more on your work, where they can find you, how can they look up CoVault?
You can find us on Twitter at CoVaultBTC. My personal Twitter is Glassy Nakamoto. You could reach out to either Twitter account. Our website is covault.xyz. There you can find our mailing list, wait list, and all these kind of things. Also, we do have a number of our products on testnet. So if you want to test our multisig, you can go to app.covault.xyz.
Well, can't wait to get started and can't wait to start using CoVault.
Thank you so much. Really enjoyed the conversation. Thanks for all the questions.